I'm James Turk. I'm a director of the GoldMoney Foundation, and it's my real pleasure to be here today in Jersey, Channel Islands, with my friend John Embry, Chief Investment Strategist of Sprott Asset Management. John, it's a pleasure to see you here, and I really appreciate you taking the time out to meet with us.
Well, it's wonderful to see you again, James. I'm looking forward to our conversation.
Yeah, it's been a while since we've had a chance to talk about markets, but let's get right into it. Silver, that's the topic of conversation at the moment. What are your thoughts on what's been going on here?
Well, I think the rise to the sort of nearly $50 recent peak, believe it or not, was justified. And it's funny when you read the mainstream press, everybody's talking about bubbles and how big the correction is going to be. And they don't seem to understand the fundamentals. Yeah, I think the fundamentals for silver are impeccable. The fact we're going through a tough correction here is not surprising. This is a paper-driven, COMEX-sponsored correction. And it's to be expected. I mean, if you've been involved in the silver markets as long as we have at Sprott, we're used to these things. They're not fun, but they're just another buying opportunity.
Yeah, one of the things that I've been trying to make clear is that there's a difference between the physical market and the paper market. And sometimes the paper market can drive prices to a certain extent because there's so much paper out there relative to the amount of physical. And it can drive it to the upside to a certain extent and to the downside to a certain extent. Is that what you see happening now, the paper market driving it because of people bailing out of leveraged positions?
Yeah, I would go so far as to say the paper market probably drives the price most of the time. When the physical market takes over is when the physical shortage of significant dimensions takes place. And what's going on right now is very clearly there's massive short positions in the paper market. These positions are being protected. And in the short run, they have a lot of power. They can move the market a long way, as we've seen. We've seen a 20% plus correction from the highs, a week ago?
Yeah.
But this is not atypical, and I don't think people should be deeply concerned about it. They should be actually thankful if they don't own silver because they're getting another opportunity to buy some.
Yeah, one of the things I've been recommending is the continuing accumulation, month in, month out. Whenever your budget allows, just continue buying regardless of the price, because in the long run, the trend is much higher, and by accumulating in that kind of cost averaging program, a few years from now, you're going to look back and be very happy. Would you agree with that?
I think it's a brilliant strategy. I've actually done that myself in gold and silver for years. Mm-hmm. Whenever I have free cash flow, I put it in. I don't worry about the price because I believe the trend is established, and it has been for over 10 years. And it's certainly what people can't grasp, all these talking about bubbles, is we're in the early stages of a massive move in the precious metals. And what we've seen to date is actually quite restrained and orderly. It will become disorderly on the upside.
Yeah. One of the things that I've been focusing on since January, and actually even a little bit before, was the interest rates on the precious metals and whether they're going to go into backwardation. And in fact, silver did go into backwardation in January. And if you look at the spot price relative to the December 2015 price on silver, we've been in backwardation ever since then. Have you ever seen anything like that before?
No, I haven't. And I think what it is indicative of is what we were mentioning briefly before, and this is the physical shortage. I mean, there's a massive amounts of paper silver out there. But because of the mounting physical shortage, people are having to pay up for the physical. And that's creating this distortion in the paper market where you've got backwardation. I think it's an extremely bullish signal going forward.
It's also an indication that the ARBs, the arbitrageurs, don't have the silver to actually borrow to sell spot and buy back in the future.
Absolutely, and that just is another manifestation of the physical shortage.
Which is also obviously another bullish indication about the silver market as well.
Absolutely.
Well, let's move from silver onto gold. Over the past year, the ratio's dropped. The gold-silver ratio, the number of ounces of gold, silver to buy an ounce of gold, has dropped from about 65 or so to as low as around 31, 32. We've bounced back up a little bit. We're still in the 30s. What's your thoughts here? Is the ratio going to continue to fall?
Well, that's our belief at Sprott. I mean, my partner Eric Sprott is particularly strong in this point. He thinks that we will go back to the historical lows, which have been like 10 to 15 times. I mean, the fact we've gone as quickly as we have from in the 60s into the 30s, one shouldn't be surprised at a correction. I mean, nothing goes in a straight line. Mm-hmm. And in this field, as you know, the corrections tend to be violent. And we're in the midst of a violent correction. But no, that doesn't affect the longer term direction, which I think probably is towards the historic lows. I think gold's going up a lot. Silver's just going up more. And it is manifestation of it's a greater physical shortage of silver in the world than there is gold.
From here going forward, over the next couple of months? Will silver climb more rapidly than gold in your view, or is it hard to say?
I would say yes, once the correction is over. Like one thing I've learned from hard experience is you don't call bottoms in these short-term corrections. They can go far further than you think, rationally. But once that's behind us, yeah, I would think silver would reestablish its preeminence in terms of upside potential.
I guess the extent of the correction is sort of a reflection of the amount of leverage that was used on the way up.
I guess it is. You know, the fact is, I always marvel at these people that get cleaned out on COMEX because, I mean, you can see these things coming. I mean, there was the confidence index, which had silver up 96% confidence, however they measure this. And I mean, traditionally, that's been a very big red flag. If you're long paper silver when this confidence stays at 95, 96% for weeks, you are probably going to get hurt. And this is exactly what we've seen.
If you're trading paper.
If you're trading paper. If you're trading silver that's paid for, physical silver, you just go, that's just part of the game. And boy, we're getting an opportunity to buy silver at a great price again, physically, here very shortly.
Yeah, that ratio that you're referring to is back in the 70s, which has recently been a good indication that we're at or very close to a bottom.
Boy, it fell quickly. I mean, it went from 96 to, I saw it yesterday, it's 77 or something. I mean, I hadn't seen it fall quite that quickly. I think it was about 2 days it took to go from, 20%.
Yeah, that's right.
20
I've
points.
never seen it fall that quickly either, not with regard to silver. I've seen it occasionally with regard to, I think, the Swiss franc years ago, but I don't recall it ever falling that rapidly with regard to silver.
But, what's been amazing to me is that no one, or I shouldn't say no one, very few people foresaw the upside potential in silver and what's already been achieved. And consequently, I mean, as this thing has unfolded, the mainstream press has been absolutely to a man negative. I mean, your psychological backdrop to this for much higher prices is terrific because the sentiment is just not, in sort of a mainstream sense, is extremely negative. I mean, and people will all be sort of taking credit for calling this correction. But the fact is they never called the upside either. So
Yeah.
I take it all with a grain of salt.
Yeah, I mean, it's curious that people are calling this thing a bubble when in fact the U.S. government debt is continuing to grow without any kind of limits. Spending continues to go. The dollar index, the dollar against major currencies is pretty much weak and in major downtrends. And to me, it seems like the bubble is the dollar or U.S. government debt, not gold or silver.
It's unquestionably that. Now, I think perhaps the hardest thing for the average person to understand, because I don't think their minds think in this channel because they don't deal with this on a daily basis, it's not the price of gold and silver that's changing. It's the value of the paper currencies that they're being valued in.
Yeah.
I mean, gold and silver have been constants for centuries. And they come and go. Paper currencies come and go, and as you know, every single experiment in fiat paper currency in history has ended disastrously. And with all evidence what's going on, we're going to have a similar occurrence this time.
Yeah, what I like to do is I like to use examples so people stop thinking in terms of dollars and start thinking in terms of gold and silver. And one of my favorite stories is that when I was growing up in the 1950s in the States, my parents could drive into the local gas station, fill up the family car with $2 silver. And today you can still do that with the $2 silver at the face, not at the face value, but at the silver content at the market value. And it just goes to show, the consistency of gold's purchasing power and silver's purchasing power. And in fact, the problem is really that we calculate in terms of dollars and we lose sight of what's really happening to the purchasing power of the dollar.
Well, that's one of the few advantages of being old. You remember what things used to cost. I used to always complain, like my mother would say, how cheap things were in the Depression. Well, I mean, I'm sort of falling into the same trap now. I remember how cheap things were in the 1950s. And I mean, it's all currency basement.
Yeah, it truly is. You're talking about fiat currencies, and all fiat currencies have eventually failed. So let's sort of step back from the markets a little bit and take some big picture look at the international financial scene. Yeah, how do you see things playing out here? Do you feel that the dollar is, its days are numbered?
Well, I do, for the simple reason that I sort of look at things mathematically. And when I look at the U.S. budget deficit, for example, you've reached the stage now where expenditures are twice as much as revenues. They're taking in less than 50% than what they're spending. Any time you've seen that in history, that means you've gone past the point of no return. So I find these debates about how much spending cuts they're going to have or tax rises to sort of deal with this budget deficit problem to be kind of fatuous, because I think they really have reached the stage that they can do nothing but monetize the debt because they can't correct it. If they were to do the kind of austerity program necessary to bring the lines closer together, they would crater the economy, which would end up causing the deficit to widen again anyways. So yeah, I think that the dollar is in its death throes. I mean, that's a big statement because, I mean, it's been the reserve currency certainly for most of this century, but most certainly since the Second World War.
Yeah.
This is a major change going on.
But isn't the economy going to collapse anyway if they continue on this road of spending and more debt?
I couldn't agree more. I think the problem is that whether you want to take sort of a form of hyperinflation first before you clean the system out, or whether the politicians have the courage to sort of do what is necessary now in an austerity thing, if you have to have an opinion, my opinion is they do not have the courage to do that, and as a result, we will endure some form of hyperinflation before we reach that state.
In other words, it's only the crisis that will cause the politicians to do the right thing?
Yes.
And hopefully they will do the right thing and not the wrong thing when the crisis occurs.
Well, I mean, at that point, there's really only one thing you can do. I mean, you have to sort of change the whole currency situation. I mean, even in Zimbabwe, they got away from, they quit printing trillions and trillions of dollars of their own currency. They went using foreign currencies as an alternative, and they seem to have addressed the problem. Mm-hmm. I mean, when you've got the reserve currency of the world undergoing a similar type experience, this is going to be a unique experience because I guess we've never really had a situation like that. Most hyperinflations have taken place in secondary currencies. One of the great stories, I mean, obviously was the post-World War I Germany experience. And if you've read about that, I mean, it was truly horrifying. I sincerely hope we don't have to go through anything like that.
Mm. How can we avoid that, though, given the road that we're on? I mean, the head of the Reichsbank, Dr. Havenstein, basically says the same thing that Mr. Bernanke does, that he has to keep printing and because the economy has to keep going with more money.
I was afraid you were going to say that. I wish I could give some optimistic response, but I'm afraid, like I am in the camp that thinks we are headed for some form of hyperinflation. And that's why I've been so pro gold and silver for a long time, because this isn't something that snuck up on us. You could see it building. I mean, it started a long time ago. It's just like everything else. It starts slowly and then it starts to pick up speed. And as you mentioned, I mean, Mr. Bernanke's actions and statements to me are beyond belief for a guy who's obviously got a high IQ. I mean, I don't know where he's coming from.
Yeah. Do you think he really believes what he's saying, or he's saying to try to keep the system going and doesn't want to be, the captain of the ship when it sinks?
I believe the latter. I think he's a very intelligent guy, and a very intelligent guy can see what's happening.
So in some respect, it's like the politicians who don't want the ship to go down during their watch. They're trying to just keep it together until the next guy has to worry about the problem.
I think that's almost the case through the whole U.S. government. I mean, some of Tim Geithner's comments as Secretary of the Treasury, I mean, are staggeringly ignorant unless you realize it's more being done for confidence than it is stating any sort of form of reality.
The propaganda effect, what
Absolutely.
Bernanke talks about controlling inflationary expectations, thinking that that's going to stop inflation even while he's building up the money supply by creating new currency, by buying U.S. government debt on the other side of the equation.
Oh, it's amazing. I mean, the fact that inflationary expectations are stable. Well, I'm not sure. Yeah, if you have to buy an iPad every day, I guess they are stable. But I mean, on the other hand, if you're buying food and energy, it's becoming apparent to the average citizen that things are getting pretty tight. I mean, their budgets are getting really stretched. So it's starting now.
And even more so in the third world, where food and energy are a higher percentage
Absolutely.
of one's income.
And they're being more honest about it. I mean, the third world is admitting, I mean, that they have an inflation problem. The one place on earth that seems to deny it totally is North America, and particularly the United States. And this allows them to continue with zero-based interest rates, which are sort of part of the problem, really, than part of the solution.
Yeah. What about the banks? How do you see them, the problems unfolding and how the banks are going to respond here? Are you of the view that the banks are solvent and safe, or are there still more issues with regard to the banking system?
Well, I think there's enormous issues for two reasons. Number one, I mean, when they went back to mark to fantasy rather than mark to market, I mean, you have a massive group of misvalued assets on the bank's balance sheet. So given how the leverage they've got, you would probably say most of them, if they really marked their assets to what they could sell them for today, they would be insolvent. But then there's the issue that doesn't get talked about maybe as much as it should, and that is a massive amount of derivatives that are through the entire system. And I mean, they revalued, or they changed how, the Bank of International Settlements changed how they valued them, in a sense that they sort of reduced the number notional value. There'd be over a quadrillion now. And when you've got all of this through the banking system and the financial system, and they've never recognized the losing side of a lot of these trades, that, well, there's a massive problem. And that, I believe, is the underlying reason, the real underlying reason for the quantitative easing to the extent, I don't see it ending. I don't see how it can end unless they're prepared to take a financial debacle.
Yeah, it's funny that you say that they've never taken the losing side. About 8 years or so ago, a good friend of mine, we were chatting, he's a derivative expert, and I was talking about, well, somebody's on the winning side of a trade and somebody's on the losing side of a trade when you do a derivative. And he said to me, no, you don't understand derivatives at all. Both sides are on winning sides of that trade because of the way they account for it.
That's correct. I think sort of where the skirt got pulled back a bit was when Lehman failed, and then there was a sort of a counterparty that was going to force to sort of reveal
what the accounting losses really
were. And that was quickly papered over, and they've sort of pushed on. But I mean, the fact is
they haven't solved the problem.
Well, no, if anything, they've intensified the problem because there's more derivatives being created every day. I mean, we're not shrinking the pile of derivatives; they're growing. I mean, we changed the way we accounted for them, so they said there were less, but there aren't less.
Yeah. So it's not only the sovereign debt problem that's a sword, pointed at the banks and their balance sheets, but the derivatives as well. And the derivatives isn't even getting the attention that the sovereign debt problem is getting.
Well, the sovereign debt is a problem, is sort of the flavor of the day. I mean, it is an extension of the banking problem to begin with. I mean, basically, the private sector couldn't carry the debt load, so they had to shove it more onto the countries. And this has created this sovereign risk problem, which is endemic. It's everywhere. I mean, I find, when people talk about, well, the euro's better than the dollar, well, I say, well, yeah, but is it? Like, I mean, the dollar's big problem is there's too many of them. They're creating so many of them, and they're throwing them out into the world. And the people that are holding them are becoming, as you know, extraordinarily uncomfortable. The Chinese are becoming very vocal on the subject, and they actually are taking action. They're not buying any more treasuries. And that forces Mr. Bernanke to monetize more of them, because where are the buyers coming from? Some of them are coming, I guess, from the banking system and what have you, but it's all a large daisy chain.
We should be taking a message from the Chinese, do what they're doing, actually spend those dollars and put them into resources, like their failed bid on Equinox and things of that nature.
Absolutely. I mean, Eric Sprott and I have been adamant on that point, that, I mean, this is not the time to be holding paper assets. It's got to be real.
Yeah. Let's talk a little bit about the mining stocks, which a lot of people have been very disappointed because they've been underperforming the metal for so long now, and people are starting to question, are the mining stocks ever going to catch up? What are your thoughts here?
Well, I think there's three factors. One is controversial, and I can't prove it. It's a thought I have. I think there has been some sort of active suppression of the mining stocks through it. You can do it so much with algorithm, computer-based trading. And so I think there has been, to some extent, a organized suppression of these stocks to keep people's interest away from the sector. And then you have the hedge funds who are always trying to make money every way they can, and sort of they're taking advantage of it. They've got all sorts of spread trades on, gold, long gold, short shares, and what have you. And it's worked because I had a great chat with a friend of mine who's one of the better gold analysts in Toronto last weekend, and he'd said he'd just been on a tour of North America, going to every major financial center, talking to a lot of significant money managers. And the interest in gold stocks and silver stocks was negligible. Like, I mean, basically they didn't even want to hear about the subject. And I think it's twofold. One is the fact that the stocks have acted terribly relative to the metals, and this thought that has been put out there that the metals are in a bubble. So why would you own the stocks if the metals are who underperform just before the metals are going to get killed? So you put all this together, and you can rationalize why this has all happened. But all it's created is, I think, a spectacular opportunity in these stocks. When the dam breaks, I think you're going to see 5 and 10 baggers all over the place.
Yeah, I guess one of the things you can add to the the negative sentiment is the fact that for most of the early part of the 2000s, the price of input costs, energy and labor, was rising faster than the gold price. So the margins on a lot of the mining companies had been squeezed, and they were showing poor operating results for a period of time. But now that's changed, and the cash flow on some of the majors is starting to look very, very attractive, and the PEs are coming down to really, I think, pretty low levels based on a historical basis. Would you agree with that?
Totally agree. And I mean, I was a huge sort of proponent back in those days of what you just said, that I think a lot of people fail to realize, you know, how tough the business was. I mean, the first rise in the gold and silver prices was eclipsed by the rise in their input prices. So, I mean, it was a very hard business. Mm-hmm. Now, latterly, it hasn't been as bad. I mean, as you correctly point out, the numbers have been getting better. They're still not great. Like you'd think that with the prices of gold and silver having risen as much, these guys would be rolling in money. That isn't the case yet. I mean, they're just starting to really get reasonable returns in equity and on investment. So, so that really isn't a reason that can be put forth for other stocks. That should have been the reason stocks underperformed before. I mean, now you're starting to see the fruits of higher prices. So I don't see that as having been a major factor in this recent underperformance of the stocks. I think it was the other things I mentioned.
Yeah. From a technical point of view, you know, the XAU's been sort of in this range, 200 up to about 230 or so, just moving sideways. Is that a bullish view in your mind, or is that, you know, again, reason for concern?
Well, I guess it's depending where you're coming from. Like, basically, if you're a bear, you could say you're building a top. If you're a bull, based on the fundamentals, which I am, I think it's sort of one of these extended bases, and generally those things propel stocks to much, much higher levels. I've been looking at the charts of sort of some individual stocks. Some of them don't look great, but then I can sort of study the companies, and they don't hit their fundamentals just because of their mining operations aren't that good.
Yeah.
But one I like, for example, is Goldfields, South Africa. And the chart on that's pretty powerful. I mean, that thing's been held in a very tight range. They got tremendous reserves. They're doing lots of interesting things. Mm-hmm. And the stocks just literally sat there like a houseplant. But that's going to change, and the chart would confirm that. The chart looks powerful.
Yeah, it's a sign of accumulation,
Absolutely.
I would guess. You know, you're talking about algorithm trades. I've always wondered whether or not there's an algorithm trade on that when the gold price goes up, the South African rand strengthens. I mean, a couple of years ago, we were at 9 rand to the dollar. We recently touched 6.5 or 6.55. We're about 6.6. But it seems like whenever the you know, the dollar strengthens, you know, maybe some of the shorts are buying the rand in order to offset the potential losses on being dollar short. Because the rand gold price has basically been going sideways at around 310,000 rand per kilo.
Well, I mean, it's not only the rand, it's also the Canadian dollar gold price has been kind of stable because the Canadian dollar, as you know, has been very strong.
Yeah.
Look what's happened in Australia. You know, I can't understand how the Australian economy functions after their currency went from 63 cents to the US dollar to $1.10 in what, 2 years? Two and a half years?
Yeah,
these moves in the currencies really, if you're trying to conduct business, are staggering. You better be well hedged.
Shows that the volatility comes from currencies and different central bank actions, or hot money looking for a safe haven, rather than the precious metals themselves. Because as I was saying about that example of, you know, silver buying, you know, filling up the family car, or two ounces of silver filling up the family car, you know, the precious metals maintain stability over long periods of time, but these currencies can be all over the place.
Yeah, like Canada's being viewed as a petrocurrency in the world, and it's justifiable. We have a very strong energy base. And we also have, at least at this stage of the game, much better finance as the United States. Well, not as much better as people think, because we push a lot of our expenditures down to the provincial level, and Ontario in particular is looking a little concerning. Our debt position in Ontario is not good. But nevertheless, I mean, from the world's perspective, we look a lot better than the US dollar. And as a result, it's pushing our currency up, has pushed it up steadily from, you know, lows of, say, 62, 61 cents to the US dollar up to about 106. And when you have a move of that magnitude over a decade, roughly, against your major trading partner, you can't adjust. Our system is too rigid to adjust for that sort of a currency shift. So consequently, our manufacturing base is being badly hurt. I mean, our resources aren't, because the prices are flexible in the resource field. Mm-hmm. And so you've got a bifurcated country, because the resources primarily are in the Western Canada, which has maybe less than a third of the population. And all the people live where the economy's becoming squeezed because of the, what's happening to the manufacturing industry. We've still got a fairly aggressive real estate picture. I mean, the real estate activity in Toronto, considering we're just north of the United States, is amazingly good. And I mean, it's almost like two different worlds, and yet I worry about that, because at some point, I mean, if the underlying economy is starting to fail, I mean, the real estate can't just sit there in isolation.
I've seen pictures of $1 million houses in Vancouver that, maybe had 900 or 1,000 square feet to them. It's just hard to believe.
Well, the Vancouver market's one of the hottest markets on the planet. I mean, I see that's a lot of Asian money coming in, and as you know, Vancouver's a beautiful place, so I can understand why it attracts people from all over the place. But for the sort of the guy working and living on sort of basic salary in Vancouver, it's getting really, really tough.
Yeah. Is Ontario the problem spot, though, in Canada in terms of looking at the economy because of the heavy industrial base there?
Ontario and Quebec. I mean,
Quebec,
I think it was instructive that Quebec voted heavily NDP in the most recent election. I would suggest that would indicate that some of the populace is really starting to feel it.
Let's talk about the recent election. Mr. Harper won a majority now.
Yes, he did.
And what is your expectation? Continuation of the same policies, even-handed, or is it going to be a more pro-American agenda, do you think?
Well, my concern is that it could well be a more pro-American agenda. I've been told that he has not been totally revealing as to sort of his plans, because it wouldn't have basically helped in his election campaign. But now, as you know, in a parliamentary system, he has an absolute majority. I mean, he and his party can do as they see fit. So we'll wait and see. I mean, I have some liberal friends that are extremely concerned about what could happen. Mm-hmm. I'm prepared just to wait and see. But he is sort of from the right-wing side. This isn't the progressive conservative party we had for years and years in Canada. This is a much more reactionary, right-wing type of conservatism. I don't know if it's at the Tea Party stage, but it's pretty right-wing.
Is there that kind of underlying, let's say, questioning about the political system in Canada that you see with the Tea Party in the United States?
Absolutely not. I mean, Canadians are far more even-handed and egalitarian.
Because the economy is better up there as well?
I guess to some extent, but it's in areas is weakening, and I think you saw the response in the NDP got, which is the Socialist Party,
right,
got more than twice as many seats as they've ever garnered in history. I mean, this was really a shattering election by Canadian standards, in the sense that the Liberals, who have been the consensus party in Canada for over a century, really got hammered. They got 19% of the popular vote. I mean, that's unheard of. Mm-hmm. And so there is change afoot. Yeah. And it's the polarization, you see, because you've got a more arch-right conservative party, and you've got the NDP coming on, left-right, which is the problem that the United States is suffering from. I've never seen polarization like that that's in the United States today. It's terrifying.
Is there an inclination in Canada to monetize deficits like there is in the United States?
No, they haven't had to yet. I mean, I think in the event that push came to shove, I suspect we would probably follow the same route. Like, some people are critical, those that think our dollar is far too high from an economic perspective in terms of our manufacturing industries, that we should be monetizing more aggressively, because we're not, and the U.S. is. That's one of the reasons driving our dollar up.
Right.
But I'm from the more, I guess, school that's not going to solve any problems. I mean, in the end, if you choose to monetize, you're going to choose hyperinflation, and that to me is the most destructive condition in the human economic sphere.
If the dollar hyperinflates, what's that going to do to Canada?
Well, we can't escape the economy. We're eventually going to have to go along.
The U.S. and Canada are tied at the hip.
Absolutely. I mean, the percentage of our activity that is done, across border, and just our proximity and our shared culture, et cetera, like, I mean, if they really get into difficulty, we're kidding ourselves that we think that Canada can avoid some of the worst ramifications.
Okay. Yeah, any last words for the people who are going to be viewing this video about?
No, the only last word, I guess I sound like a broken record because I've been saying it for years, is that you must take any of these violent corrective phases in gold and silver as a buying opportunity, until such time as we've reached the top of the bull market. And I think that's years and thousands of dollars away in gold, hundreds of dollars away conceivably in silver. And just relax and be very careful with leverage, because if you're trying to be a smart guy with leverage in this field, you can get hurt because the big boys can really move the prices around.
John, thank you very much. It's been a real pleasure.
It's always a pleasure chatting, James.
Thanks.